All right, so you're thinking about starting a business in the UK. Pretty exciting stuff. But you're also working on a tight budget. And I'm guessing figuring out the right structure is probably top of mind. Well, you've come to the right place. Today, we're diving deep into two of the most cost-effective options, sole trader and limited company.
That's right. And you might be surprised to learn just how inexpensive it can be to get started, particularly if you go the sole trader route.
Okay, let's unpack that.
Yeah.
Sole trader, what's the main appeal? Especially for someone just starting out, especially if cost is, a major factor.
Well, I think the biggest draw is definitely the simplicity and minimal cost. Essentially, you're declaring yourself open for business with very little paperwork. And the best part, no registration fees.
So you're telling me it's free to set up as a sole trader?
Exactly. You just need to register for self-assessment with HMRC, the UK's tax authority, and you're good to go. It's incredibly appealing, especially for solopreneurs who are just testing the waters or just want to keep things, as straightforward as possible.
That sounds almost too good to be true. There's got to be a trade-off somewhere, right?
Well, you're right to be cautious. The trade-off for that simplicity is something called personal liability.
Now, there's a term that can make even the most seasoned entrepreneur a little bit nervous. Can you explain what that means in practical terms for someone just starting out?
Sure. So as a sole trader, you and your business are legally considered a single entity. This means that if your business incurs any debt or faces any legal issues, your personal assets, things like your savings, home, even your car potentially, are at risk. They could be used to settle those debts or legal claims.
So maybe not entirely free if things take a turn for the worse. Can you give us like a real-world example what this personal liability could look like?
Absolutely. Imagine you're a freelance graphic designer working from home. You accidentally spill coffee on your laptop, frying it beyond repair, but you hadn't backed up your client's project files, which were due that week. The client, understandably upset about the missed deadline and potential lost revenue, decides to sue. As a sole trader, you would be personally liable for any damages awarded, potentially putting your personal savings or even your home at risk.
Ouch. That definitely highlights the downside of unlimited liability. So it's sole trader. Easy setup, minimal cost, but that personal liability issue, big one to consider. What else should we be aware of?
Another point to consider is the perception of credibility. Some clients, particularly larger companies or those in certain industries, might prefer to work with businesses that are structured as limited companies. They might see it as a sign of greater stability and trustworthiness.
So a limited company structure could offer like a competitive advantage in those situations, especially when dealing with, more established businesses.
That's right. Think about it this way. Would you feel more comfortable working with a freelancer, operating as a sole trader, or a company that's been officially registered and has that more formal structure?
That makes sense. It's about projecting a certain image, of professionalism and reliability. Okay, back to the sole trader track for a moment. Let's talk about the costs. Besides the free registration, what other expenses should someone anticipate in that first year?
Well, you might want to consider public liability insurance, which can start from around £50 per year. This protects you if, someone is injured or their property is damaged because of your business activities. Aside from that, if you can handle basic bookkeeping and accounting yourself, you could potentially be up and running for less than £100.
Wow, that's incredibly accessible. It's easy to see why the sole trader route is so popular. For new businesses, side hustles, those who are just starting to, explore their entrepreneurial spirit.
Exactly. It's a fantastic low-cost option to test your business idea and get things moving quickly.
Okay, now let's shift gears and explore the other end of the spectrum, the limited company. It definitely sounds more official, but I'm guessing with that comes a different set of considerations, right?
Absolutely. A limited company is a separate legal entity, meaning it exists independently from you. One of the biggest advantages here is something called limited liability.
Okay, I'm sensing a theme here.
Yeah.
But limited liability, how does that work in practice? And how does it differ from the sole trader scenario we just discussed?
Essentially, as the name suggests, your liability is limited. Your personal assets are kept separate from the company's assets and liabilities. So even if your business experiences financial difficulties or faces legal challenges, your personal belongings, like your house or savings, are protected. They are not at risk.
That peace of mind definitely sounds appealing, especially after that graphic designer scenario we discussed earlier. So less risk, more of an official structure, but I'm guessing it comes at a cost.
Yes, setting up a limited company is more expensive than a sole trader structure. It requires a registration fee of £12 if you do it online or £40 by post.
Okay, still a relatively small investment compared to some of the other costs associated with starting a business, like, renting a space or purchasing equipment. What other expenses should we factor in?
Well, you also need to consider accounting fees, which are typically higher for limited companies. This is because there are more complex financial reporting requirements. You can expect to pay anywhere from £500 to £1,500 per year for accounting services. Additionally, it's advisable to have directors and officers insurance, which can cost around £250 annually. This type of insurance protects you, as a director, from personal liability for any decisions you make in running the company.
So the costs are starting to add up, but I remember our source material mentioned that limited companies can be more tax efficient, especially for higher earners.
Yeah.
Can you break that down for us? What does that actually mean in practical terms?
So this is where things get a bit more complex, but it's an important point to consider. As a limited company, you pay corporation tax on your profits, which is currently set at 19%. However, you can choose to pay yourself a salary through a system called PAYE, which stands for Pay as You Earn. This means income tax and national insurance contributions are deducted directly from your salary. On top of your salary, you can potentially take additional income as dividends, which are taxed differently and can offer tax advantages for higher earners.
So there's definitely like a strategic element to consider here in terms of how you structure your income and tax payments. It sounds like it'd be worth consulting with an accountant, to figure out the most advantageous approach.
Absolutely. Tax optimization is a crucial aspect of operating as a limited company and can lead to significant savings in the long run.
Okay, so limited company. More expensive to set up, more administrative requirements, but the limited liability and potential for tax efficiency, attractive benefits. But I know there are some downsides mentioned in the source material. What about these increased complexities, administrative burden, and less privacy? What do those actually entail?
You're right, there are some trade-offs. As a limited company, you have more compliance obligations. You're required to file annual accounts and a confirmation statement with Companies House, which is the UK's Registrar of Companies. The confirmation statement essentially verifies the company's information and is a matter of public record.
So less freedom and potentially more paperwork compared to a sole trader setup. I'm also wondering about the less privacy aspect. Can you elaborate on that?
Certainly, because information about limited companies is publicly available through Companies House. Your business activities, financial performance, and even your registered address are more transparent than they would be as a sole trader.
Okay, so that's definitely something to weigh. Increased public visibility in exchange for limited liability and potential tax benefits. Seems like choosing the right structure is all about finding the balance that works best for your individual circumstances.
Precisely. There's no one-size-fits-all answer. It's about making an informed decision based on your priorities, risk tolerance, and long-term goals.
So far, we've covered the initial setup costs and some of the basic advantages and disadvantages of each structure. But before we dive deeper, I'd love to get your perspective. Based on what we've discussed so far, what's standing out to you as the most important factors to consider? What would you be thinking about if you were in the listener's shoes?
That's a great question. I think at this point, it's crucial to assess your own comfort level with risk. How much personal risk are you willing to take on? What are your personal assets like? If you own a home or have significant savings, that limited liability protection offered by a limited company might be worth the added cost and administrative burden. On the other hand, if you're starting small, have minimal personal assets at risk, and prioritize simplicity and low costs above all else, the sole trader route might be a good starting point.
That's a really helpful way to frame it. It's about aligning your business structure with your own personal circumstances and risk tolerance. The source material also touched on tax implications and privacy concerns, which are obviously important considerations. But there's one more factor we need to address, and it's a big one: Brexit. How does that shake things up for someone choosing a business structure in the UK?
Oh, that's a great point. Brexit has undoubtedly introduced a layer of complexity for UK businesses, and choosing the right structure is no exception. Stay tuned as we unpack the post-Brexit landscape and how it impacts your decision-making process in Part 2. It certainly has. The source material highlights that Brexit has impacted, various areas of UK business, and choosing the right structure is definitely one of them.
So let's get into the specifics. What are the key things our listener needs to be thinking about, in this post-Brexit world?
Well, if your business involves importing or exporting goods to and from the EU, there's a whole new set of regulations and customs procedures to navigate. This can add extra administrative burdens and costs, regardless of whether you choose to be a sole trader or a limited company.
So Brexit headaches are pretty much unavoidable, regardless of your business structure. But is there a way to, potentially minimize the impact?
The source suggests that being a limited company might actually offer, some advantages in navigating these complexities.
Okay, I'm intrigued. How so?
Well, for starters, a limited company often has that. Perceived credibility and more formal structure we talked about earlier. This can be advantageous when dealing with EU counterparts, who might feel more comfortable doing business with a registered company.
So in the post-Brexit landscape, that extra layer of officialness that comes with a limited company could be a real asset, especially when dealing with, international trade.
Potentially, yes. It's definitely a point worth considering, especially if your business relies heavily on trade with the EU.
That's a really interesting insight. Okay, so we've weighed the pros and cons of sole trader versus limited company, explored the added complexities of Brexit, and now it's decision time. What are some of the key questions our listeners should be asking themselves before making that final call?
The source material highlights several crucial questions to consider. The first one focuses on the inherent risk level of your business. Some businesses are just, naturally riskier than others, perhaps because of the materials they use or the services they provide. If you're dealing with, say, potentially hazardous materials or offering high liability services, that limited liability protection offered by a limited company structure could be worth its weight in gold.
That makes perfect sense. You wouldn't want to risk your personal assets over a situation that could have been, mitigated by having the right business structure in place. What's the next key question?
The next one really gets personal. It's about understanding your personal assets and how much protection you need. If you own a home, have substantial savings or other, valuable assets, choosing a limited company structure can offer real peace of mind. It creates a clear separation between your personal holdings and any potential liabilities your business might incur.
Right, because as we discussed earlier, with a sole trader structure, you are the business. Your personal assets are essentially on the line. A limited company provides that buffer zone, that legal distinction between you and the business.
Exactly.
Okay, so we've got risk level and personal assets. What other factors should be top of mind?
The source also emphasizes thinking about your long-term vision, your growth plans, and potential need for, say, outside investment. If you're aiming to scale up your business quickly, attract investors, or even consider selling your business down the line, having a limited company structure can make things much smoother.
It's like laying the groundwork for future success, setting up a framework that's, conducive to expansion and investment.
Precisely.
And I'm guessing those tax implications and privacy concerns we touched on earlier are still relevant at the stage of the decision-making process as well.
Absolutely. They remain crucial factors. Think carefully about how much control you want over your tax planning and how important maintaining privacy is to you. A limited company might offer more flexibility and opportunities for, tax optimization, but it also comes with increased transparency as company information is publicly available.
So it's a trade-off. Again, weighing those pros and cons is absolutely essential.
Okay,
we've covered a lot of ground, but before we wrap up this deep dive, are there any final words of wisdom you'd like to share with our listener? Who is on the verge of making this important decision?
I'd say remember, while initial costs are an important factor, it's essential to think about the long-term implications of your chosen structure. A limited company might seem more expensive to set up, but the liability protection and potential tax benefits could outweigh those costs as your business grows and evolves.
That's a great point. It's about playing the long game, right? And making a decision that aligns with your vision for the future of your business. And remember, this deep dive is just a starting point. It's packed with information to get you thinking critically. But don't be afraid to reach out to HMRC, Companies House, or a qualified accountant for personalized advice. They can help you navigate the nuances of these structures and ensure you're making the best decision for your specific circumstances.
I couldn't agree more. Getting professional guidance is invaluable when making such a significant decision.
Now, before we let you go, we'd like to leave our listeners with a final thought-provoking question to ponder, something to spark, further exploration. Our source mentioned that a limited company structure can make things smoother. when seeking outside investment or even selling a business. Why do you think that is? What is it about this structure that makes it so appealing to investors and potential buyers? We'll leave you to think about that as you continue on your entrepreneurial journey. But for now, we're moving on to part 3, where we will address that very question. All right, so let's delve into that final question. Why does a limited company structure often seem more attractive to investors and potential buyers?
Yeah, it's a multifaceted answer, but I think it really boils down to a few key factors. Perhaps the most significant is that that limited liability protection we've discussed at length. Investors want to know their investment is safeguarded. And a limited company structure does just that.
So it's about mitigating risk. Investors want assurance that their personal assets won't be on the line if the company, encounters financial or legal trouble.
Exactly. That separation between personal and business liability is a major selling point, but it's not just about, risk reduction.
What other elements contribute to the appeal of a limited company in these scenarios?
Well, there's also the perception of professionalism and credibility that comes with a limited company. It signals a more established and organized operation, which can be very reassuring to those considering, investing in or buying a business.
Ah, yes. That air of officialness we talked about earlier, it kind of suggests the company has a solid foundation and is taking its legal and financial obligations seriously.
Right. Investors and buyers often see this as a sign of stability and trustworthiness.
Okay, so we've got risk mitigation and enhanced credibility. Anything else?
Absolutely. We can't overlook the potential for growth and scalability.
Yeah.
A limited company structure tends to be more adaptable for, raising capital, attracting new investors, and expanding operations.
It's like you're setting the stage for future growth from the outset. The structure itself facilitates expansion and investment, which is naturally appealing to those looking for high growth opportunities.
Exactly. It's about providing a framework that supports both short-term stability and long-term growth potential.
So as we wrap up this deep dive, it's clear that choosing the right business structure in the UK is, more than just a formality. It's a strategic decision with significant implications for, your present and your future.
Couldn't agree more. It's about understanding the nuances of each option and making an informed choice that aligns with your individual goals and risk tolerance.
We've explored sole trader versus limited company, delved into the costs, the benefits, and even tackled that post-Brexit landscape. Armed with this knowledge, you're well equipped to take that next step.
And remember, while we've provided, hopefully, a comprehensive overview, there's no substitute for, personalized advice. Don't hesitate to consult with HMRC, Companies House, or a qualified accountant to, make sure you're making the best decision for your specific circumstances.
That's right. This deep dive is designed to empower you with knowledge, but expert guidance can help you navigate those finer details and make a confident, informed choice. And above all, remember to enjoy the journey. Building a business is an incredibly rewarding experience.
Absolutely. Embrace the challenges, celebrate those victories, and never stop learning.
I think that's a perfect note to end on. So to all our budding entrepreneurs out there, best of luck on your exciting ventures. We'll be back soon with another deep dive into the world of business and beyond. Until then, happy building.